Louise Bedford here, your host of the Talking Trading podcast. This is where traders are made. I am so excited to tell you a little story about my past. Now, my father got me involved in trading such a very long time ago, and I used to watch what he did and I never really understood it. And we grew up, as many of you know, in quite compromised situations where we were, I would say, dirt poor. All of a sudden, in this particular year, Dad had a trade go well, and that trade was in gold. The year was 1984. In 1985, after this gold trade, we moved house, we bought a second car, we were allowed to shop at actual shops for clothes. You can imagine me and my three sisters going into an actual shop. I bought a bra. My mother had sewn every bra up until that point. But in 1985, oh yes, my friends, that store-bought bra with an actual label on it, oh, it made a huge difference. We got this sound system that was awesome, just awesome. So our life changed completely. And what this did is it got my attention. You'll be quite surprised to know that at around about that age is often where our mind maps are formed in terms of our money scripts. So even at that teenage year, that fragile, questioning, self-possessed time, we are actually ready for lessons. And that lesson got me into the share market. So just a few short years later, I started investing in the share market, primarily based on that gold trade. Now, I have invited somebody to talk about gold to the show. Dana Samuelson, it's so wonderful to have you on the show. What do you think of my little story about Dad and his gold profit?
Well, I'm very happy for you all. That's amazing. 1984, 85, the market in the U.S. was fairly stable at that point in time. So I'm not sure quite what he did that worked out so well, but
There
I'm
were
very happy.
South
Yeah.
African Krugerrand, I don't know how to say that properly, involved, and there was a big sale of something that had been accumulated for a very long period of time. So go Dad. Now, I have invited you to the show, Dana. Let me introduce you properly. You're from Amerigold, AMERGOLD, amerigold.com, and you've been active in the physical gold and silver markets for 42 years. You're a nationally recognized expert on vintage and pre-1933 US gold and silver coins, and we'll talk about why that's important in just a little while. You're also the founder and president of the American Gold Exchange, AGE, a leading national precious metals and rare coin company. Oh, Dana, what have I left out of your little introduction there?
Well, I'm a little older man and I have a very young daughter at home. So I'll never be tired.
Look, Dana, I haven't had anybody talking about gold and silver on the show. I have purposefully avoided specific sector because, not your sector in particular, any sector, in terms of that in-depth discussion, because generally my people tend to be technical analysts. We look at price and volume action to determine whether we enter, exit and position size based on that price and volume action. So I like this because we're going to mix it up a little bit. Everybody here is so interested in data and I'm very keen to hear your views. And I know a lot of listeners have heard that we're not on the gold standard anymore. What does this mean and what are the implications of this?
Well, what we have today is a monetary system that's not based on anything material other than the full faith and credit of the governments that are issuing the currency. And we have no anchor to hold their spending habits versus their taxation or ability to raise revenue in check. So what we've seen over the last 30 years is just a global explosion of debt. And now we're in an interest rate environment where interest rates have surged dramatically over the last 6 or 8 months, a year. And the interest bill on this astronomical debt has increased dramatically as well. So the interest payments are going up substantially. Here in the US, we paid about 600 billion US against our treasuries and other obligations in interest last year. And next year, that's going to be about over $1 trillion in debt, which could be anywhere, 7-8% of GDP, which usually has been 2 to 4%. So we're getting into a kind of an imbalanced financial Gordian knot, out of which there's no escape except for further devaluation of the purchasing power of the fiat currencies, which is where having a little gold makes a lot of sense.
We have a politician here who famously said, when consulted about, we seem to have a poor economic situation and the difficulty here is very widespread, she said, well, why don't we just print more money? Let's do it. What? What is the problem with that statement?
Well, there's no accountability and there's no responsibility, more importantly. And you cannot just have an open checkbook without an equivalent amount of money coming in over a period of time without just something breaking. And if you don't have a hyperinflation like some countries have had, Argentina is one of them, for example, right now in this year that's having some real problems, triple digit inflation, which is just a complete loss of the purchasing power of the currency. You have a moderate problem. It used to be a small problem. Now it's a moderate to a larger problem. It's going to undermine the standard of living for most people who can't get ahead of it financially. And that's what's happening around the world.
Yes, yes, it seems that the crazies are in charge in many situations. One of the things that I've found is that often people talk about gold in terms of it being a recession proof concept, an insurance policy. And I would love your thoughts. I want you to help me understand a particular chart. I'm going to pop my screen onto screen share. So everybody following along, if you're following along on audio, I'm going to describe what I'm seeing. But please do join us on our YouTube channel, youtube.com/trading game. youtube.com/trading game, because you'll actually get to share with me the screen that I'm about to share with you. Now, what we've got here is a chart that says how gold performs during recessions. Now, this is from visualcapitalist.com, and what we've got is a lovely gold chart here showing some spikes and some peaks and some troughs, and we've teamed that up with the blue line which shows the S&P 500 index. Now I'll just describe for you based on this table. Sometimes the gold is outperforming the S&P 500 and other times it's underperforming. So this is contrary to what a lot of people believe. So if we look at the 1973 recession, gold definitely outperformed. It outperformed like crazy, 87%, compared to the change in the S&P 500 of minus 13%. 1980, it underperformed. 1981's recession, it underperformed. 1990, underperformed. 2001, it overperformed. 2007, definitely overperformed. That was a corker. And 2020, it slightly overperformed. Now, I'll stop my share there, but I would really love to hear your thoughts because this is contrary to what I expected. I thought I would find a chart like this and it would display an inverse relationship with the stock's performance. Now, by an inverse relationship, I mean when one goes up, the other goes down. I thought it would be almost 100% correlation with that inverse relationship. So, can you help me understand this? Because I would love to hear your views.
Right. So when gold underperformed relative to the S&P 500, those periods of time tended to be more run-of-the-mill recessions where there were no really fundamental underlying problems that were more than just, hey, the economies are slowing down. In 1973, when gold overperformed substantially, we had inflation was running hot. We also had an Arab oil embargo in the U.S. Right in the 2000 recession. We had a pretty big pullback in stocks because of the dot-com bubble. When we had as I heard you say, corker, which made me laugh.
I remember that. I do remember that. I was definitely trading then, been in the
Right.
markets for 30 years, and that in particular was a very tumultuous time.
Right. So that was the biggest financial crisis in the history of the world. The financial system in the US almost came apart at the seams. So there was a lot to worry about, just like there was back in the early 70s. And again, during COVID, where gold outperformed, but modestly. So when gold tends to climb a wall of worry, and when there's something to worry about, people flee to gold, or have a flight into gold as a flight to safety. And run of the mill recession, you don't get that fear factor that really drives gold higher, or other external factors that are meaningful, like an oil embargo, or a just complete worldwide financial crisis. So there are other factors involved besides just economic activity affecting the gold price relative, especially to stocks.
Mm. So, is it something that we could use as a leading indicator of economic unrest? Because it sounds like there's more than just the one variable.
No, gold is not a leading indicator in the true sense. It's not going to be the canary in the coal mine for the most part. That's not to say that it won't run hard and fast early, but usually it's reacting to something.
Mm.
So, gold tends to climb a wall of worry more better and harder than in most other times. So if there's things to worry about, like government debt, government debt is not really something to worry about. But when a major country defaults, that is something to worry about, right? So it just depends on what's happening underneath the surface.
Mm. So, for everybody listening to this, read between the lines of what Dana is saying. This is not an instant U-Butte fixed solution where when one goes down, the other goes up. We actually have to look a little bit deeper. So, I do urge everybody to follow their trading plan, to look at their entry, their exit, and their position sizing like a good trader should, because that is the only way to come out on top and to be a trading winner. Now, Dana, do you pop all of your money into gold or do you do a percentage? What do you do as a trader looking to get some sort of coverage into this sector?
Well, I run a national physical precious metals and vintage coin mail order business. So we always have inventory. So I'm highly correlated to gold to start with. I do like real estate because, like gold, it's hard to make more gold. It's hard to make more real estate. And there's more and more people on the world every 5 or 10 years. So the demographics work very well for both real estate and precious metals. I do dabble trading, but I tend to follow the bigger term trends and try and ride them because I'm not really an active trader otherwise. Although I do trade futures contracts in the precious metals markets, and I speculate a little bit there because it's what I watch all day long and I follow it. Now, gold and silver, they have trading patterns just like stocks can have, where they have support and resistance. And when they break one level, one way or the other, they trigger, the next level of trading. So I watch closely, in particular, when we get to the high of the market or the low of the market's trading range to see whether, hey, we're going to pop higher or break lower. And I trade accordingly at those times.
I like that. So it is responding to the signals of supply and demand, as in any share chart where humans are involved. I mean, that's what we're talking about too. Human emotion, what's driving the buying, what's driving the selling, and really acting on those signals is something that we should all be doing. Now, I have heard you say that gold loves cheaper money. Can you tell me more about that? I'd like to hear the origin of that statement and what the implications are.
Well, when gold doesn't produce a yield, so when we have low rates of return, especially relative to inflation on traditional assets like treasury bills or other interest bearing devices. Gold likes that. That's what I mean by cheap money, when there's no return on money. So when interest rates here in the US were zero and in negative in other places, gold was a good place to be. Now we've exited that, period of easy money or cheap money due to inflation's rearing its ugly head in the past 18 months. But even with higher yields and money moving out of, say, some stocks and bonds, or even out of precious metals into treasuries here in the US in particular, that's where my market, I'm familiar with it, because people can get a yield, people still are scared. So the gold price is actually holding up better than you might think it would because of the underlying debt problems that we have. And as you said, earlier, crazies in our political system, here in the US, we can't get along to save our life, one side versus the other. And, we've had a couple budget crises as a result. So, will the US pay its bills? That's a good question. Why do we have to wait till midnight on Friday to see if we can get an extra vote out of one congressman or not? It's crazy. You make obligations, you should honor them. That's as simple as that.
Yeah, well, I think from a personal perspective, it should be as simple as that too, frankly. But wow, we won't go there. Now, help me understand, because most of our listeners here are in Australia and New Zealand. We do have roughly 15% of our listeners come from the US as well, though. So just to give you a perspective, how do things work for Australians? Because I know the exchange rate has something to do with it. You're going to have to explain this to me. When our dollar is low compared to the American dollar, is gold cheap or expensive for us?
Expensive, more expensive, because gold is priced in dollars, like oil has been since the 70s. So when the inverse relationship with gold is primarily to the value of the US dollar. So when the US dollar becomes stronger relative to other currencies, that tends to make gold less expensive in dollars, but more expensive in other currencies. So that is the real traditional relationship between gold, the dollar, and currencies that are not the US dollar. So when your Aussie dollar is weak relative to the US dollar, that tends to make gold more expensive in your currency. Makes it cheaper in our currency, but more expensive in yours.
Yes. So we do have several layers that we have to work through as an Australian investor. Now, one of the things that I do is employ a macro filter, and that macro filter tells me whether to trade or not to trade. Now, I use relative strength comparison, which is RSC, which is a type of indicator to help me flip between the Australian and the US market. So if things from a relative strength comparison are doing well for the US, I'm going to be investing in the US. But I'll also be looking at that currency risk, because the currency risk can take a really great trade and foul it up because of that exact thing that you just said, Dana. So I don't think necessarily just look at the action of the price and of course on the share chart, the volume, look at the currency risk as well. Now, gold is often thought of as an insurance policy. I know there are gold ETFs. I know there are silver ETFs. So exchange traded funds are where you can get like a bundle of different instruments, all included from just trading that one central instrument. It's similar to an index trade, if you haven't been introduced to that before as an audience of Talking Trading, that ETFs are great because they do spread your risk and it's an instant form of diversification. Now, do you feel that gold or silver ETFs are a good way to get involved in this sector?
Well, they're one way to be involved. So I'm a physical dealer. Once you have physical metal in your possession, you have money, real money, hard money that's outside of the financial system. Number one, it's true, portable, transferable wealth. It's liquid anywhere, and it has no counterparty risk. So those are the attributes to physical gold and silver that most people should consider. Now, if you're trading an ETF, you can harness the price direction of anything, up or down, easily at the click of a computer button. And there are gold and silver ETFs that I do own and trade. GLD, and SLV. There was a triple play silver ETF that I bought in my IRA during the 2020 COVID eruption in March, when the silver price fell about 40% in a day, when we had a great liquidation event. I mean, it was instant. We had one during the great financial crisis that took 3 months. We had another one during the COVID problem, and it took 3 days. So I watched the chart. I saw silver go down to a price that was so low it was ridiculous, about $12 US from about 18. And I got into an ETF that allowed me to triple either the gains or the losses, but I hit the bottom of the market and I wrote it up. Now, I never could have done that with physical silver. It was impossible. So that's where an instance where an ETF was extremely advantageous, but you're actually owning the metal. You're just trading the price on paper in a convenient way. So that's the way, if you're a trader and you want to get in and out of the market, ETFs are a good way to go.
Yeah, yeah, I've had a lot of fun with ETFs, and it's certainly something for the longer term investors that are looking for that diversification. You can trade that just on any share trading platform as well. So it doesn't have a lot of the blocks that the friction that people put in place from a broker perspective. It's quite a straightforward transaction. So one of the things that I like to do is to, once I notice something like, say, the oil price is moving, or maybe even in this sector, maybe this price is moving, that you can see the overall underlying moving, then what actions can you take? See, the good part about being a trader is there's never just one thing that you can do. What is the impact of that underlying move on other instruments? Is there a correlation? First of all, can you prove it to yourself? And is there a filter down effect? You know, we have a big resource group here, and in terms of the sector, XMJ, which is the GICS sector, the Global International Classifications of Sectors, that GICS sector is huge here because we are such a big resource. Like, we're such a big country for resources, there's no doubt. So do you notice correlations between the price of gold and silver and other instruments, or is it a standalone aspect with this sector?
Well, we have seen gold and silver tend to run in pretty direct correlation with the US stock market at times over the last couple of years, which is unusual, but it's more a function of the availability of credit or liquidity in the markets, primarily engineered by the Fed pumping money into the system that might not be there otherwise. And, gold and silver will contract on days when the stock market has fallen. But that's not very usual. But we've been living in unusual times now. So gold and silver, their most direct correlation is the inverse correlation of the US dollar. We have seen gold and follow the oil price, because if the oil price runs, that tends to be a bit inflationary, and gold tends to like that a little bit. But there's a lot of variables underlying the gold price as well. So
Yeah.
it's a bit hit and miss.
Yes, and this is why, really, when we're looking at being a professional investor, we need to consider all of these factors. It's never just one thing. Now, I'm really curious about, you've mentioned about coins, you've mentioned about physical gold. Now, there was a newsletter that was very, very popular, Australian-based newsletter, that was telling everybody during the whole unfortunate situation with COVID, what you need to do is buy gold bars, stick them in your safe, because then you can just melt them down, and just bit by bit, if you need to pay for them, because when money becomes defunct, you're going to have gold, and gold will always be required. Now, I personally found that a little bit too far, but I know people have different views. Should we be stocking up gold nuggets and gold bars in our safes?
Well, I think everybody should have some physical precious metals as a way to have some, like I said earlier, have some money out of the system, have true portable transferable wealth that's liquid and has no counterparty risk. because increasingly our politicians are adding more and more risk to the value of our currencies. Now, I wouldn't, recommend you buy a 10-ounce bar and try to chip it into pieces. That's not a good way to sell to sell gold because someone has to buy it and be able to resell it too, or else the only buyer would be a refinery, and you're not going to get a quick settlement. I do like gold as a way to hold real wealth in tangible form. 100 ounces is the size of a paperback novel, and it weighs about 8 pounds, and it's worth about $200,000 US right now. If you want spending money in a crisis, I think you should have silver, because a 1-ounce gold coin is about $2,000 US today, where a 1-ounce silver coin is about $25 US. So rather than try to chip a bar into pieces, I'd have some ounces of silver. And I do like sovereign minted, meaning government made 1-ounce gold and silver coins, either the US Mint, the Canadian Mint, the Austrian Mint. The Australian Mint makes good gold and silver kangaroos. So you have an excellent product in your own backyard that you can use. And if you want to have some currency of last resort, silver would be your spending money, where gold would be your real savings vehicle.
I like that. And they're just so pretty, aren't they? I know as a technical analyst, I'm supposed to be completely separate and objective and not look at the underlying at all, but really it's so pretty. I was over in Florence recently and I went to a coin market there. It was fascinating. All these people with these folders, with these plastic sleeves that they flipped over, and there were some amazing coins there. And I thought, isn't this interesting? Because it seems like everybody trusts everybody here not to grab those coins and run. But when I carefully looked, there were some very mafia, big buff, somewhat greasy people standing around the edge. And I thought, okay, they've got that looked after. Tell me about...
There probably were some cameras you might have missed too.
That's right. My daughter and I were kind of like, wow, that's really fascinating. They're so trusting here. But actually, I don't think I'd want to go against one of those big men around the edge of that market. I'd like to talk about this because I don't have coins. I know that there are a lot of people who collect coins, and I have, in my research for this show, found out some very, very interesting factors here. Now, I know that you're an expert on vintage pre-1933 US gold and silver coins. Can you share some insights about the historical significance of this and why this pre-1933 figure?
Well, if you go back to ancient times, gold and silver have been both money and currency. Money is something that has value. Currency is something we use as a medium of exchange. And they have been trusted and accepted through most of man's history as financial instruments. Gold, because it has an unusual great color, it's scarce. Silver, for the same reasons. They're both malleable and basically impervious to the elements. Gold was money and currency throughout the world until the 1930s to help bring some stability into the financial system following the Wall Street crash in 1929 and the Great Depression here in the United States. There was a choice between paper money here at that point in time, which was introduced in the 1890s, and gold and silver currency as currency to help put more liquidity into the system. Franklin Roosevelt called the gold in and made gold illegal to own in the US. So all of those coins that were minted between 1795 and 1933 in gold were called back in unless they had numismatic, which is a fancy word for saying collector value, 15% or above or more their gold value at the time. And there wasn't a collector market for these coins for the most part at that point in time. So most of them were confiscated and melted. And when the US went off the physical gold standard for currency, Most of the world followed suit by the late 30s, and then World War II came, and that ended it completely. So gold went out of the money, out of the currency in 1933 in the US. So we still have a lot of those coins survive. A lot of them went to Europe in trade payments in the teens and 20s, bags and bags of them. So a lot of our vintage US gold coins, which are collector coins today, come back from Europe, and we're allowed to own them again. The relegalization of private ownership of gold was made in 1974, and that allowed a lot of those coins to come back into the US. And since then, we've seen an explosion of modern bullion coins made by the various mints as well. Silver remained currency and money until the 60s or 70s. And then the big silver run in the late 70s killed that for the most part for the countries that still had silver. The US went off the silver standard in 1964. So that's when the hard money went out of the system, and the dollar became the world's reserve currency after World War II due to the Bretton Woods Agreement, where we wouldn't issue gold as money, we would issue dollars as money, but it would be backed by gold. And that lasted until 1971, when Richard Nixon was forced to take us off of that dollar to gold peg in the US, which allowed politicians to start printing more money than we actually had resources to back it. Gold helped to hold countries accountable, because you can't just simply ramp up production of gold coins as money, which allowed, help to keep the system constrained to what was really buying and selling of goods and services, GDP, versus, buying paper and printing money, which they've done in earnest since then.
Yeah, go figure.
Just to put it in historical perspective, between 1795 and 1995, the U.S. accumulated $5 trillion in debt. Between 1995 and 2023, we've gone up to $33.5 trillion. We've multiplied our debt sixfold in the last 28 years. And other countries around the world have done the same thing. And that's what I mean by politicians debasing the purchasing power of fiat currency. And it's a bit scary at this point in time, because it's starting to hockey stick up. That chart is starting to hockey stick up. And when anything goes, from a curve into a small curve and a higher curve, and all of a sudden it's going vertical, traders know that's usually when the end is coming.
Yes, that
or the
hockey
reversal is
stick.
coming.
Yeah, that hockey stick look is a real problem, because often, clearly scale can make a difference here, so please don't take it exactly literally, but often the angle of the incline will match the angle of the decline. So if something goes up incredibly quickly, it means that support resistance can't form on the way up. So that is where, when it crashes back down, it can't fall back to support, because there is very limited support. So anything that has that hockey stick look, we do have to be very aware. It's almost like an elastic band, where it can be stretched, but overstretched, and then spring back down. Now, we must have had a similar situation for Australia too, because I do remember my grandmother showing me some 50-cent pieces here that were completely round. And now our 50-cent piece has like a straight little edge. I don't know how many, I'm going to call it 12, maybe 10, I haven't counted, but the little straight edge around on our 50-cent piece. She had coins that were completely round, and I remember we held them with reverence when we were children, because she said, this is not worth 50 cents, this is worth more than 50 cents. She blew my mind. And I've got one other little story for you, and this, as a coin collector and as an expert in this region, this is going to shock you. My mother was brought up in Sri Lanka. When she was a child, she was 13 years old, she went to the beach, and there's a lot of turtles in Sri Lanka that come and lay their little eggs. Lay their little eggs on the beach, and they come back year after year, and they lay in the same place. So Mum was down looking at the turtles' eggs, and she was digging in the ground, and she found some Spanish gold coins in
Wow.
the ground in a
Yep.
little box. It was incredibly exciting. So when she moved out from Sri Lanka to Australia, she packaged those up with the little box. So Spanish gold coins. They think they were probably about 16th century. They're not 100% sure. And they went missing. Now, this was our family's fortune, and really that would have changed our entire life if those had have come over to Australia from Sri Lanka. So are there loads of coins out there and nobody realizes? We just don't even find them. They might be in an attic somewhere, or are they pretty much all accounted for by now?
Well, the rising gold price, the economic uncertainty has driven most of the hoards out. But with modern technology, we have found shipwrecks, where we know coins. I'm sorry, boats laden with gold or silver from the 17, 16, 17, 1800s went down, and they are able to actually get to them now where the technology never allowed that before. There was a coffee can found growing in a tree in Northern California a couple of years ago that had a bunch of U.S. Mint rare coins in it that we suspect someone who worked for the U.S. Mint director of the San Francisco Mint in the 1860s somehow got it and hid. And then something happened to him. And then a couple was walking through the woods and literally saw the glint of it and found it. And it was worth millions of dollars because it had some real rare coins in it. Now that's an extremely unusual find, but yeah, we have some strange and unusual, stories in our business. We've got a million of them actually. So it's, people understand when they find something old, especially if it's gold, that it's got value and they hold it.
Yes, yes. And for when we're looking today, what would be some of the key considerations in this situation? Should we be looking to collect coins? What should people consider? Because it has never occurred to me until we became friends, Dana, and I just started going, oh my gosh, this is a whole new world. So I'd like to hear your thoughts. Should people start collecting gold coins?
Well, there's two different areas. There's the modern minted gold and silver ounces. We call them coins because they're basically round bars that the U.S. Mint's making today. The Royal Canadian Mint's been making. These mints have been in operation since the late 60s to the mid 80s for the most part. Some started in the 90s, but it's buy all you want, we'll make more. So there's no rarity to them or scarcity, and they are replaceable. So that's a way to own physical precious metals in a convenient form. Now, there is a little bit of friction to the transaction for minting fee, distribution, shipping, insurance, profit to the dealer. The in and out fees are a little high relative to trading stocks. So you don't want to just buy these as trading vehicles. Now, the collector coin market, coins that were made historically years ago or centuries ago, that's more of a supply and demand driven market. So you're betting on a different set of factors there. So if you like to collect coins, the interesting thing about our coinage for almost every country for every era is the history of the countries in the coins. Great Britain has the ruler on every coin. And there was an era when the sun never set on the British Empire. So for Queen Victoria, King Edward, King George, Queen Elizabeth, they made gold sovereigns, which are little quarter-ounce sized gold coins. And they made them in Australia, the Perth and the Sydney Mint. So we have George V sovereigns from the 20s and teens and early 30s that came out of Australia. And they were very well made, by the way. They had a good press back then. So it's two different markets, but collecting coins is a way to tangibly have a real piece of history. And they all have very interesting history individually, because you never know where a coin's been for all those years.
Yes, that's exactly right. I do remember reading about in the Queen Victoria biography that I read that one of the reasons why she liked her face on a coin was because she felt she was looking at her subjects. They couldn't get away with anything, which I thought was quite interesting.
I hadn't heard that before.
Look, Look,
Yeah.
I'd like to start to wrap it up, but I do think there's an area here that I haven't quite delved into, and I would like to hear your ideas about the involvement and the establishment of the Anti-Counterfeiting Task Force and its collaboration with Homeland Security and the Secret Service to combat counterfeiting. Counterfeiting clearly is something that would erode your market, because if you have a lot of counterfeit coins out there, then how can people trust? How can people trust that this is actually the right coin? What are your thoughts about that, and what are they trying to do?
Well, we do have a modest but growing problem with Chinese counterfeits, and they've been knocking off Rolex watches and Gucci bags for decades, since the 80s. And they started to really move into the physical precious metals markets, or not markets, but into the arena, following the big run up in precious metals in 2010. So after that, we've started to see Chinese counterfeit gold and silver eagles, Canadian gold and silver maple leafs, Australian kangaroos.
How dare they?
I know, and gold bars, and they're the proliferation of them is increasing. So what has happened is the various mints around the world have responded by making the dies that the coins are struck on more intricate, with more minute detail in them, that makes it harder for the Chinese to counterfeit them and pass them off as reputable, good delivery products, because they just don't look right and they certainly don't sound right. Of particular problematic area are gold bars, because gold bars have plainer designs than the coins do, and they're easier to replicate and make look like the real thing. So that's why I don't recommend people go out and buy just the cheapest gold bar they can find, because the Chinese can take tungsten, which has almost the same density as gold, and plate it with gold and make it look like a real gold bar that's gold all the way through. So I, as president of the Professional Numismatists Guild, which is the leading organization of rare coin dealers here in the US, I was president in 2016 and 2017 of the organization when this problem came up. And I conceived of the Anti-Counterfeiting Task Force. I said, hey, this is bigger than us coin dealers. We need the mints to be involved. We need the US government to be involved. And we need to have as much cooperation between us as we can do. And I helped to get it launched, but I wasn't the man that built it. But it's turned out to be instrumental today in helping the mints stay up on cutting edge minting technology and to prevent the public from being defrauded more than they are. So that's why it's important you deal with a reputable dealer, regardless of where you are. Deal with a reputable dealer, because this is a little bit more pernicious problem than most people realize. And you don't want to be getting a deal and then find out that the other guy really got the much better part of the deal because he sold you something that was fake. And most people that don't have experience in this wouldn't recognize a fake from a real one, where I look at, thousands and thousands of these every year. And, a bad one sticks out like a sore thumb to me. It's easy for me to spot.
Well, look, I think there's good advice there. And Dana, I'm going to aim to summarize what we've been talking about, but I'm going to need you to fill in the blanks because this is a new area for me. So, as a trader, definitely have a look at XMJ, because that, as the index for the sector, is fascinating to see whether it's outperforming or whether it's underperforming the market. And also have a look at the gold price in relation to recessions and how that compares with the S&P 500, because sometimes it's ahead, sometimes it's behind. And we've learned from Dana that the sentiment, the worry, that wall of worry that gold climbs, is the key aspect to look at. And it's very difficult to chart an emotion. So definitely look at the charts, but think about the deeper meaning behind it. effect. And also consider carrying a tiny little piece of history around with you in the form of a vintage gold coin, because wouldn't that be exciting? I have to say, I have loved having you on the show, Dana. Could you please fill in the gaps for that summary, because it has been a broad overview, and also tell everybody how they can get in touch with you?
Well, thank you, Louise. It's been a pleasure talking to you. So, having some gold and silver is a good insurance policy for the rest of your money. And if you are earn profits trading, it may not make sense to just plow them back into dollars, whether they're US or Canadian or Australian. You might want to take some of your profits off the table and put them into something that'll hold its value better over time. Not a lot, 6 to 8% of assets is a good proportion where you have enough where it's meaningful, but not too much where you lose opportunity in other places. Remember, politicians are debasing the value of the paper money we carry around in our pockets. And they're doing it more and more, and especially when we're in an inflationary environment. We all got a pay cut last year, and we're all getting a pay cut this year, and we're all probably going to get a bigger, a decent pay cut next year. If you relate the amount of purchasing power you have in your pocket relative to the things that you need to buy, think about it that way. I live in Texas. We have a lot of beef here in Texas. I like a good steak. Good steak cost me about $20 a year and a half ago. That same steak cost me $30 today, right? If I had an ounce of silver, I could still get that equivalent of a $20 steak today. So that's something you should think. And, precious metals, they're a little bit different animal, but they do tend to trade in pretty reliable short-term trading patterns. So if you want to try speculating a little bit with gold and silver price movement with ETFs, that's would be something that I think most of your people would readily understand, because gold tends to get into a range, silver tends to get in a range, and it bounces up and down within the range until it breaks. And it's usually some external force will push it, like a currency valuation change or a geopolitical problem. So just think of what's happening underneath the surface more than just what's happening on the screen when you're thinking about trading.
Dana Samuelson from amergold.com. Thank you so much for your time. How should people stay in touch? Mainly through your website?
Yeah, our website, amergold.com, is a wealth of knowledge of information. We've tried to make it rich in information so people can learn. We have online, live, transparent pricing. We're very competitive. And we also tend to put good information up about what's happening in the world. So we have a daily gold update. If people want to log onto our website, it's details what's happening to gold today based on what's going on in the stock market, bond market, geopolitical environment, what our politicians are doing. So there's always the fun thing about gold and silver for me, and what's kept me interested for 43 years, is there's always something different impacting our market, this month, next month, this year, next year. So there's always something that I can follow that's like, okay, this is different, but it keeps it interesting for me, and it might keep it interesting for you as well.
I love it. You have just been so much fun. Thanks for listening to my endless stories about my mother, who nearly managed to get all that Spanish gold to Australia, all those gold coins that Gran got us to play with that circular edge instead of those straight edges that were worth so much. I have just adored talking to you about my father, who made all that money in gold and made a difference to our life. So Dana, I'll be going to your website, amergold.com, right now. Thanks for being on the show.
Thank you. Thank you for having me. Best wishes and good luck trading out there.